Hi, this is Paul from globaltradingsoftware.com, and this is a trading tutorial video for futures trading. And I'm looking at 6E. Now, we have a great xBrat range breakout trading indicator. A lot of people use it for gold and indexes and things like that, but 6E is really, really good on this trading indicator on the European and the New York gold pit opens. Now, we use a 10-minute time frame on currencies. Euro is very, very closely linked with gold and moves and have those correlations. So one thing we look at here is some really great moves across the board. So we're going to start a whole week. Really, this is a Monday here in March, and we're going to look at this. Just keep in mind this New York gold opening range session here, because it peaks at this point there. Excuse me. So there's some rules here. When we get the opening range and the opening range bias is red, we're only looking for the short. So we didn't take this long trade. That's the rules. Okay. When we get the opening range here and the bias is green, we're only looking for longs. Okay. In this case, when the long comes back up, when the price 6E comes back up and breaks this opening range, that's the long trade here. Furthermore, we've got more trading opportunities during the day. As 6E comes back down towards the evening, we get the bias turn red in this New York gold opening range. So as you can see, the price action does break down and breaks down below. The bias is red, so we're only looking for the shorts, and we go short down to here. Now, a strategy to manage these trades with this is either use the manager on our day trading aggressive when that ribbon turns green, or in fact when we get that first green candle with higher than average volume, that cyan dot there, we get out. Or a lot of people with this indicator look for certain ticks. So whether it's 10, 20, 30 ticks or whatever, they have a set profit target each. So when they're going up or down, when it's coming back through, so you get 20 ticks coming up, 20 ticks coming down, and then later on we get the bias turn green. So we're looking for a long out here, again 20 tick long. We get the European opening range here and the bias is neutral, so you can either go long or short or just stay away. We come back through here and the bias turns green, so we get a long trade to go 20 ticks long, for example. We then get the New York gold pit open. We get a bullish bias here, so only looking for the longs. That didn't work out, came back to break even quite a few times there, so lots of opportunities. The main thing for me is it comes back down through. You see the bias, the New York gold and the European opening range turns red. That's the trade we're looking for here, breakout to the downside. And again, this is where sometimes using the manager actually maximizes that type of profit here, rather than taking 20 ticks, 20 ticks, 20 ticks. Yes, on some instances you would probably only take 20 ticks at this point on this long where the cursor is, but this short here, that's a lot bigger move. So using the manager would actually maximize those profits. Let's walk forward again into this week. We come into the European opening range. We're only looking for longs. This long did trigger here, failed, come down, take the stop out just below the range, comes back up again, bias turns green, we get a nice big move out of there, pulls back down, but the manager bias doesn't change. So the manager, the ribbon here, remains green. So you would stay into this trade going into the New York gold pit open there and take a really great profit. Again, that's using the manager. New York gold pit open, only looking for the longs here because the bias for that opening range is green. We don't take this short. But what happens? Comes back through that opening range, breaks out the top, the bias is green, look for that long, that big move there. We move back down, we come back down and it's neutral here, so we don't take the trade, but it comes through and down through here and the bias is red through that European opening range, we take that 20 tick short, for example, comes back up through, but the bias is still red here, so we don't take this long coming out of the European opening range. However, when we come to the New York gold opening put range, bias is green, take the long. There we go. Comes back down to test, no real trades, and then we get the European gold pit open here. We get a bearish bias, only looking for shorts, doesn't happen, goes long, don't take the trade. We get the New York gold pit open here, only interested in longs, comes down, we don't take this, comes back through, bias turns green, breakout, take the long. And again, using the managers here, huge trade. Keep moving along. European gold pit open at this point here, we are neutral, so we're not really interested in any trade there for me. We go from neutral to bearish here, great looking short. If we didn't get that, when it breaks through that previous New York gold pit open here, the bias is red, we go short down to this point here. So multiple trading opportunities really. New York gold looking for the short, comes up a little bit, comes down, there we go, nice trade. Don't really get any longs here because the bias is neutral, so we don't take any trades there at that point. And then European gold pit open, looking for the shorts, no trades. We go from red to green. That's a tough trade, that one, so probably no trade. And this is where we are right now. We've come back down through the European open. The range is coloured in red, so the bias is bearish. So that little short trade into that New York gold pit opening range. So this is a prime example as where there's not a great deal of fresh air between this current European opening range and the previous New York range, which could act as support. So when you're going to take that sort of trade, you're going to be very, very strict and very tight with those stops. So again, this shows you this is the thinkorswim version of the opening range. It's available for quite a few other platforms, and the links are down below in the description. But I just want to show you that there are different ways to use this opening range trading strategy. Don't stick to just the golds and the indexes and stuff. Understand that the euro, the 6E, can behave very, very well on those gold pit opening ranges, and this is what this indicator was designed for. It's designed for currencies, for metals, for oil, for indexes. There's lots of uses. Just know when that opening range is. And we use the 10-minute on currencies. This was the example on this. We use 5 minutes on energies and metals, and we use 15 minutes on those indexes. So great little trading tool, available for lots of trading platforms.